Thank you, John. Thank you, Stephanie. Good morning to everybody. I have to admit it's always a pleasure to be back in Dubai. Honestly, not because of the climate, but because of the fact that Dubai is one of the most inspiring places when it's about the future. And it's about addressing the most pressing challenges the world is facing. And, I was there on the last autumn during the COP28, and there were many other opportunities. So again, it's a great pleasure to be here because indeed I think it's always a good opportunity to exchange views, even beyond our two regions. But I think it's important to have these opportunities. And thanks again to OMFIF for organizing this, John and your team, and also to the audience and the speakers who have accepted our joint invitation. Of course, this conference brings our two regions closer together. It's another, so to say, not only a attempt, it's another step, it's another milestone in working closer together, offering a platform to exchange and discuss experience and potential joint ways forward. Why? Because we are two regions which are, I would say, soft powers. Soft powers because we are not military powers, and that's why we have a very strong interest in working together and forging together a global order or defend a global order which is based on rules, on agreements, on treaties which are mutually respected. Having said this, we have to acknowledge that we are living in geopolitically challenging times. It's more important than ever to explore possibilities of cooperations and creating together win-win situations. Looking at investors' needs identified in last year's OMFIF Global Investors Public Report, I conclude that we are a great match. First, the geopolitical considerations are the number one factor affecting reserve management. And second, more than 1/5 of the investors anticipate increasing their allocations to the euro. And thirdly, more than 40% of the survey respondents plan to increase their holding of green bonds. The answer to all these investors' wishes is simply EU bonds, I have to say, and this will not be a big surprise. Because we have invested a lot in the creation of it, and I think we can say that they fulfill all the standards that Warren Buffett once defined as investing is laying out money now to get money back in the future. So I'm delighted to highlight three dimensions of why Eurobonds are an excellent choice for investors. They are future-oriented, like I said, Dubai, perfect for diversification, and solid like a rock. Therefore, they are likely to play an increasingly important role in the portfolios of global investors. The facts speak for themselves. Our EU bonds are rated excellently, AAA, by the major credit taking agencies. At the same time, the investors' base for EU syndicated transactions has grown to more than 1,800 investors across more than 70 countries. This success story is based on the solidity of our bonds, which, thanks to multiple layers of protection, are as safe as a bond can be. On the one hand, the EU budget is underpinned by a cast iron guarantee that all borrowing undertaken by the Union and all interest rate payments due will be paid under all circumstances. The European Union and its 27 member states stand for this promise, and it's also enshrined in our treaty. So it's not simply a promise or a verbal guarantee, it's enshrined in the biggest assets in the European Union, and therefore it was important to help them to recover. And I have to say, already at the end of 2021, 1 year earlier than predicted, the European Union economy arrived at the same level stage than just before the pandemic. Of course, then we were confronted with the war in Ukraine, and of course we were facing other challenges. But I think important is to understand this joint effort immediately showed a quick response at the markets, because it showed, so to say, our determination to address challenges quickly. And this is why I think we can be proud about what has been achieved. But now we have to implement further implement sovereign style approach in order to fund the different policy programs. Our union bonds offer a safe and predictable variety. So first, we have meanwhile multiple funding instruments. We have EU bonds, EU bills, and EU green bonds, more or less the whole options. We have different funding techniques, syndications and auctions, and structured communication with the markets via a 6-monthly funding plan, for example, but also other reports, etc., particularly in the area of green bonds. With this new funding toolkit in place, the Union has been able to rapidly grow its annual issuance volumes. As recently as 2019, the Union's total debt outstanding stood at only 50 billion euro and was split across multiple different bond levels. As of the end of March 2024, the EU debt outstanding now stands at approximately 480 billion euro, 10 times as much as 5 years ago, but now under only one label. During the course of this year, we will become the 5th largest issuer in European capital markets, and our debt will exceed 500 billion euro. Until the end of 2026, this market presence will continue to evolve to an expected outstanding amount of debt close to 1 trillion euro. With this, we are growing out of the supranational market into the market of sovereign bonds. This was already recognized last year by the European Central Bank when it reclassified us in their collateral framework to category 1, the same category they apply to sovereign issuers. Currently, this process is getting traction. Recently, a leading bond index provider has launched a consultation process proposing to add the EU bonds to the definition of sovereign bonds. The consultation process will run from April to end June this year, after which the decision will be announced. Should this proposal be confirmed, EU bonds will need a much stronger structural demand. Other index providers may follow this example. In any case, EU issuances have proven their stabilizing impact, not only to provide critical financial support to drive ambitious reforms and investments designed to make the European economy more sustainable, resilient, and prepared for the green and digital transition. They also bring in wider benefits, providing an invigorating pillar for the capital markets. Union bonds are an excellent opportunity to diversify risks. They represent an additional highly rated, liquid, and positive yielding investment opportunity with similar characteristics to other safe assets and attractive returns. Union bonds are increasing the pool of safe euro-denominated assets. As a consequence, it will give more options for portfolio risk management, benefiting all investors and, as a side effect, boosting the international role of the euro, which in times like this is also an asset in itself. These benefits are not NGO's primary objective, but they remain significant positive consequences of the increased union presence in international debt capital markets. As I said, union bonds are a real investment in the future for investors, capital markets, and even beyond, because also the funding side matches our green ambition. Therefore, we will raise up to 30% of next generation EU funds through green bonds. This was a commitment by the European Commission, endorsed by our member states, and reflected in the programs we have mutually agreed between member states and us how the money should be used. And I can tell you, the European member states will invest more than 30%. Some member states even up to 60% of their allocation out of Next Generation EU for green investments. And this means that we have so far issued more than 55 billion euro in green bonds, and in this, the Union is on track to become the world's largest issuer of green bonds worldwide. Why is this interesting for investors? As an Arab proverb says, our parents planted, so we ate, and we plant for our children to eat. If this is our guidance for investments, our green bonds offer an excellent opportunity to be part of the solution, tackling the challenges of our generation and contributing to future growth, stability, and an environment in which our children and grandchildren can live. In fact, the highest return on investment you can get. To ensure this, the Commission strives for a best-in-class approach to transparency for green bonds. Therefore, you can find all information on our green bond dashboard, which updates almost in real time information on the different projects and their effects implemented by our member states. So I think there's a weekly update for the time being, and we try even to be more in time in the future. We added an additional layer of transparency with the Green Bond Allocation and Impact Report. I could present it a few months ago at the COP28 here in Dubai. It proves in detail how we bring ambition to action and how investing in the NGO green bonds will generate a direct impact on a global level. Based on our robust scientific methodology, we calculate the million tons of CO2 emissions we avoided per year and estimated the general impact of investments financed by NGO green bonds. According to our analysis, investments financed through our green bonds could reduce greenhouse gas emissions by 44 million tons per annum. I suppose you have the same feeling like I had it, so I asked what does it mean in a more understandable way. And as an illustration, I can tell you this is comparable to the annual emissions of over 4 million households in Europe. I think this is already something where you can understand the impact of all these investments. And in addition to the direct impact, green bonds trigger further impact by stimulating green projects, innovation and technology, which will further help to save CO2 emissions. Our green bonds are thus a testament that an ambitious green financing tool works as a catalyst, stimulating green innovation and the transformative green power of the market. So, in conclusion, the key to everything is determination, as an Arab proverb says. Let us be determined to invest in the future, in stability, sustainability and safety. The European Union is prepared to work with you to create greener and more digital progress. In this regard, the Union bonds offer a compelling investment. They are at the same time euro-denominated, sustainable, safe and perfect to diversify and thus fulfilling a multitude of Congolese investors' wishes. Working hand in hand to shape our common future is also our best antidote to counter the current geopolitical and geo-economic uncertainties. And that's why I'm looking together with my team forward to our discussion, to our exchanges, to our networking, because I think we share the same interests, the same objections, and I think together we can achieve much more. Thank you very much.